another trading week. This is going to be a very jam-packed week. So this is going to be a weekly market outlook for the 12th to the 16th of June 2023. Let's take a look at what's been going on last week. We did get a surprise rate hike from the RBA. It's not really that much of a surprise because they've been a little bit more hawkish the week before, talking to parliaments about how inflation is probably going to get higher and stay longer there. So it's not really that much of a surprise. Canada follows suit with another 25 basis points hike. This is also a surprise hike. So we did get two surprises from the central banks in Australia and Canada. I think one of the key drivers for last week, which is considered to be a really quiet week, we did get the weekly unemployment claims a little bit higher, more than what the market is expecting. Expecting a 236,000, we got 261,000. So I think that's basically what's been moving the market. But other than that, we don't actually see a lot of movement in the market. We did get the lower than expected US ISM services PMI, but apart from that Monday and Thursday, we don't actually see a lot of action, especially in the currency market. But this week, this is going to change everything. All right. Just to start with, on Monday, Australian market is going to be closed for King's birthday, so it's going to be a holiday over there. And then on Tuesday, this is where it starts to get very interesting because we have the CPI numbers, and this CPI number comes in just right before the FOMC meeting, the FOMC meeting result, which is going to be on Wednesday in America. Some part of the world is going to be on Thursday, kind of past midnight a little bit. But before that monetary statement comes out, we basically have the US CPI numbers, we've got the US PPI numbers. So those are the final two numbers for the FOMC to consider. And the consideration for this week is that there's likely a higher chance for a skip in June and a potential hike in July. But I think what the market could be and should be anticipating is that there could be a surprise hike. We don't know, but other central banks has been hiking. We've got that surprise coming out from the RBA. We've got surprise coming off Bank of Canada. So could the FOMC follow suit? That kind of increases the probability a little bit, especially with the CPI number and the PPI number just right before that. If we get a hot CPI number, if we get a higher inflation number coming out from the US, the expectation for the CPI numbers for a drop from 4.9 to 4.1%. This is a 0.8% drop, and it is quite significant. If we don't get that 4.1% drop, for example, we get 4.5%, the market sentiment could shift to a potential for the FOMC to potentially hike interest rate. But other than that, I think what we really need to focus on is actually the economic projections, because we need to know if the interest rate target projection is going to get increased. The dot plan, is there going to be any changes? The expectation is that for the dot plan for 2023 is that there should be two more interest rate hikes of 25 basis points. So the potential for the FOMC to give about 50 basis points up until the end of the year is a possibility. I don't think we're going to be looking at any rate cut. I think that's out of the equation at this point in time. But yeah, so we got CPI, we got PPI just right before the FOMC statement. So I think this is going to be really crucial. Coming up from the UK, we've got the UK GDP numbers, we've got the UK employment numbers, and then Australia, we also have the employment numbers, and then it just comes in. After all this data, the ECB is potentially going to hike another 25 basis points, and they are expected to hike 25 basis points. So yeah, that's going to be on Thursday, and then on Friday, it's not over yet, we've got Bank of Japan. So we've got Bank of Japan in terms of their monetary policy. I don't think they're going to change much, but any surprises to the change in the YCC or any tweaks to the YCC or any comments coming up from the Bank of Japan, so far they've been coming off across as very dovish, but any change in their tunes, that could significantly impact the market. So we're not over just with the FOMC, we're not just over with the ECB, we are going to wrap the week with the Bank of Japan. So we've got ECB, Bank of Japan, FOMC, It just comes in one after the other. So we got Wednesday for the FOMC, Thursday for the ECB, Friday for the Bank of Japan. We got CPI and PPI numbers on Tuesday and Wednesday. So a very significant week this week. It could cause a lot of volatility. It will potentially cause a lot of whipsaws in the market. So just trade with caution. Now, especially if we take a look at the technicals, now the dollar index here has corrected itself to a normal correction level. We still see the momentum pointing down at this point in time, but if we take a look at the dollar index itself, it's actually bouncing off that 38.2%, which is where the Ichimoku cloud is located. So could this be the end of the correction for the US dollar? Technically speaking, it could, right? Because it has corrected itself to 38.2%, which is a normal correction level. So with that and with what's really going on, there is that anticipation that the US dollar could actually get stronger if the data does support for a little bit more of a hawkish FOMC, or if FOMC does hike this month instead of skipping June. That could be the trigger that could really send the US dollar flying really, really high. Now, if we take that into comparison with the Aussie USD, for example, the Aussie USD here finds resistance at 67.50. This is the resistance that we talk about. Anything beyond 67 is going to meet 67.50 as the first resistance, and ultimately we still have 68 cents for the resistance. And that 68 cents this week, if you take a look at where it is, that's resistance 1 on the weekly pivot, which is exactly at 68 cents. Now, in terms of the weekly pivot itself, it is at 67 cents. So this gives a little bit of an indication of what the market could potentially do. Any drop below 67 cents would potentially see the Aussie USD drop down even lower, because we would consider that as a rejection at 67.50, 68 cents. So keep that in mind. This one here has transitioned above the Ichimoku cloud, but the Ichimoku cloud itself is actually very thin at 67 for basically the next 2 weeks. So there's a lot of possibility of that rejection if the US dollar gets stronger. Now, the next thing that we need to consider is also the Euro USD. If we take a look at the movement in the Euro USD, it's not even able to reach 1.08 for it to technically correct itself properly. So we don't actually achieve that 38.2%. So I think the selling pressure could actually come back in again, especially if we get that hot CPI numbers on Tuesday. That's going to really shift the sentiment a lot to a potential a surprise from the FOMC or any hawkish comments coming out from the FOMC. So again, the CPI matters, the PPI matters, and that could be the main trigger. Right now, with the Euro USD, we still need to consider this as a downtrend. We don't actually even see this as a proper technical correction. In fact, the worst case scenario is that this could actually be forming a bearish flag pattern for the Euro USD. So any break below 1.07, that could actually trigger further selling on the Euro USD. And the Pound USD is actually in a very similar situation. Now, we talk about the Pound USD and we keep saying, the Pound USD is in a very different scenario. It's technically still above the Ichimoku cloud, but looking at the price movement and where it's currently finding resistances, which is at 1.26. 1.26 is the 78.6% Fibonacci retracement. It's kind of the upper limit in terms of a retracement. Beyond 1.26, in terms of resistance, we've got that 1.2666. That's the May 2022 high. So there are still a lot of resistance for the Pound USD, and we are actually very close to that resistance. Now we take a look at what price is doing and what the Ichimoku cloud is forming. The next 1 month for the Pound USD is going to be very significant. If the pound is unable to break and push higher above 1.27 in the next 1 month, it would potentially place the Pound USD in more of a sideways range bound market condition, and then eventually it would just slice back below the Ichimoku cloud. So that's one consideration here. So we're looking at the Pound USD where the market is actually a little bit exhausted here. So again, any strong pressure coming out from the US dollar, any bullish momentum on the US dollar, that would actually significantly change the movement in the Euro USD, the Aussie USD, and the Pound USD as well. Now the Pound USD might be in a different condition because we do have a lot of support for the Pound USD, but we also have strong resistances for the pound USD. So with the pound USD, in terms of whether or not you should be positioning yourself for the pound USD, it is a little bit too late for you to start positioning yourself at for the pound USD. If you got in at about 1.24, I think the best case scenario would be to actually move your stop loss to break even, or potentially even lock it to 1.2450. It's just that we are so close to 1.26, and if there's any rejection at 1.26, that could signal the end of the rally on the pound USD. So this one here, still bullish, but just be a little bit more cautious. All right, and next one is the dollar Japanese, and this one here is also in a very interesting place. If we take a look at the movement in the dollar Japanese, it's basically just a reverse of the euro USD itself. So it's unable to correct itself technically. All right, it's actually finding a lot of support at 139, 138.50. So if we take it and we blocked it, it's basically the range between 139 and 141. So if we actually see that break above 141, then we are potentially looking at a potential run higher for the dollar Japanese yen, potentially towards 145. This is also going to lift the euro yen and the sterling yen, so all yen crosses are going to be tied up with the dollar Japanese yen. Now, can the dollar Japanese yen break above 141? If that CPI number comes in hot, right, or if the FOMC starts, going back to their more hawkish tone, then yes, the dollar Japanese yen could break 141, and it could lead to further gains towards 145. 145 is the level that we want to watch out for, because 145 is basically the level that a lot of traders are anticipating, where when the Bank of Japan and the Ministry of Finance in Japan is going to start warning the market that they might intervene. So that's going to start from 145. In terms of the intervention level, I think that's going to come in at 150. But again, for the dollar Japanese yen, and this one here, it's a little bit too close to call if there's going to be any continuation to the upside. It's too early to call if there's actually going to be any break to the downside. I think the key levels just to watch out for is actually 138. If we break below 138, then yeah, we might see a deeper correction for the dollar Japanese yen. Otherwise, if this one continues to break 140, 141, then I think we should be anticipating further gains on the dollar Japanese yen. All right, so just be mindful. It's a very jam-packed week this week, so trade carefully, and good luck with your trades. I'll see you soon.